Hello and welcome to Policy Watch. The RBI has cut the repo rate by 25 basis points and that's going to be our focus today. We will also look at the revised draft of the food security bill that the cabinet has cleared and is also slated to be presented in Parliament. My guest this week is Himanshu Watts, Energy and Infra Editor with the Economic Times. Welcome back to the Policy Watch, sir, Himanshu. But before Himanshu and I start chatting, here are the headlines. The RBI cuts the repo rate by 25 basis points. Subha Rao says headroom for further monetary easing very limited. The revised food security bill cleared by the cabinet, tabled in Parliament. Government hopes to pass bill after Parliament reconvenes. And India and Africa revised their bilateral trade target to $100 billion by 2015. Anand Sharma says the less developed countries should use the duty-free tariff preference scheme to increase trade traffic. Those were the headlines, and now let's get you the first story right away. Along expected lines, the Reserve Bank of India exercised some monetary easing by slashing its short-term lending rate, or the repo, by 25 basis points. The RBI, however, has left the CRR untouched. Here is a detailed report. Take a look. In its mid-quarter monetary policy review, the Reserve Bank of India today cut the repo rate by 25 basis points to 7.50%. Repo is the rate at which banks borrow short-term money from the central bank. Consequently, the reverse repo has now come down to 6.50%. The action comes along expected lines, even though there was a spike in food inflation in the January data released by the government just last week. However, the cash reserve ratio, CRR, or the cash that banks are mandated to keep with the RBI, remains unchanged at 4%, despite some expectations of a reduction of this component on account of liquidity tightness in the system. Emphasizes addressing the growth risks. The headroom for further monetary easing remains quite limited. RBI's action has been welcomed by the Planning Commission.
The signal that I read from what the RBI has done is that they perceive that inflation is beginning to come under control. They are persuaded that the fiscal deficit reduction is giving fiscal space, and so that they are signaling that there will be a turnaround in the interest rate environment. Obviously, how effective all this is going to be depends on how the year moves in the next quarter.
However, industry isn't pleased with RBI and wanted more action from the central bank to push growth.
See, the industry is going to a very tough way, and interest rate is one of the big hands to improve the industry's health. And still we are getting only 25% basis points, so we are very much disappointed. If fiscal deficit wants to improve, then you have to fund more money to the industry, and industry will more investment. Then only you will get the more taxes, most indirect taxes, most excise, customs, and economy will grow.
The spectre of inflation has also not helped, as a widening wedge between wholesale price and consumer price inflation is making it tough for the central bank to anchor inflationary expectations. The wholesale price inflation for food stood at 11.4% in February. The equity and bond markets did not react due to the policy action. However, the markets did react sharply on account of a major political development, as the DMK withdrew all sort of support from the ruling UPA government. The economy expanded at a 25-quarter low of 4.5% in the October-December quarter, and 2.4% rise in industrial production in January after 2 months of contraction suggests the recovery is still quite weak. The current account deficit has hit a record high 5.4% in the September quarter and is expected to end the 2012-13 fiscal year at its highest level ever. Bureau Report, RSTV. There you go, a repo rate cut of 25 basis points by the RBI. Himanshu, even though there has been a repo cut now, it was expected along expected lines. He's kept the street happy, he's kept the finance ministry happy as well. Analysts now feel that lending rates of banks might not see a cut anytime soon. It is also felt that they'll only see a cut when deposit rates, both short-term and long-term, see a decline. Your thoughts?
Yeah. See, the banking sector is under a lot of pressure. So many sectors are doing badly, whether it's the power sector, the telecom sector, the aviation sector. I know there's a long list.
Infrastructure as well.
Infrastructure, yeah, going beyond, power and stuff. So, they'll not be in a hurry to cut lending rates. They have to keep their own house in order. And from the government side also, it needs to capitalize the banks. So, they will not be in a hurry to do such things.
This move is expected, of course, this 25 basis point reduction in the repo rate is supposed to benefit borrowers, retail and corporate both. But what happens to the other side of the fence, depositors? What does it really entail for them?
See, they'll probably have to wait longer. The message from the RBI governor already is that there's very limited room for further going down that path. And given the track record of the current regime and RBI, he will not hesitate to go back the other way if anything goes wrong in the economy.
Absolutely.
Because last year also you saw he was under enormous pressure, both from the government and of course from the industry. And yet there were times when it was widely expected he's going to ease things. He didn't.
So he's a bit of a fiscal hawk in that sense.
Well, that's one way to put it. The way I'd look at it, you also need such people because, his message to the government is that fine, for the last 6 months, you've done some good things in, controlling the deficit, in raising diesel prices. So don't get the foot off the pedal.
Absolutely.
Keep at it. If you don't, then, I have my limitations.
Right. Like I mentioned before, Subba Rao did keep the street happy, kept North Block happy as well. But one keeps coming back to the same question, and your publication, I was reading it the other day, put the nail bang on the head. It raised a very, very pertinent question and asked, in one of the articles I was reading, is what will a repo rate cut at this juncture really achieve? What has the previous repo rate cut achieved? If you go by analysis and numbers, there's been little improvement in credit demand, hasn't really happened. Investments haven't increased. But the counterpoint here is that monetary policy actions like these usually have a lag while they start working. Do you agree with that, first of all?
Yeah, I agree. These things do have a lag. And see, the key point here is a sort of a reversal in RBI mood from going in the other direction.
Right.
And, so many things in the economy, including, the regulatory structure, the governance issues, the demands issues, they are not yet right. So, anybody who said that the only reason people are not investing is interest rates.
It's not really correct.
It's not the case because, in many businesses, even if the interest rates are much higher, if they see a good market opportunity, they would still invest. So it's a combination of things. So, it cannot be interest rate determined completely.
Absolutely. But do you think, and there are some people who feel that this particular lag for a developing economy like ours is too long a lag, and only an eternal optimist can now say that, after the interest rate cut, the economy is going to pick up?
Well, look, it's not a very reasonable expectation that, you can switch on and off investment. When the RBI started tightening monetary policy, and it's been quite a long time. See,
there was a cycle of 18 months of continuous monetary tightening, if I remember correctly.
Yes. Yeah. So he needed to tighten it for 18 months because when the monetary authority is tightening, the message it is giving is that, look, you're growing too fast. This is not sustainable. And you actually have to unwind some of the things. So that itself took 18 months. So, one shouldn't expect the opposite effect to happen in 18 days or something.
18 days or something.
It'll take its time.
Absolutely.
There'll be, when it comes to investment, people are watching the international environment, the interest rate, the inflation rate.
All of these things taken in
all those
whole,
things. So, I think too much has been emphasized on the interest rate alone. And therefore these expectations that, okay, now he's done it, so where's the growth?
Absolutely. I want to talk about a point that was raised in one of the other shows that I do. And the point was that he gave a speech. Governor Subba Rao gave a speech in London, I think, just a week before that. And in that particular speech, it didn't look like that he wanted to cut the rates because he personally thought that it wouldn't really make a difference. And the time wasn't right. Inflation was going haywire. But even then, on March 19th, he goes ahead and cuts the repo by 25 basis points. Do you think the governor was compelled to do so because he didn't really have an option? There was pressure mounting from North Block as well?
See, as a spectator to this, and having seen many RBI governors, of a long number of them, the person who seems least prone to pressure from North Block is the current incumbent.
Obviously,
yeah.
Succumbs to pressure.
See, he has a few concerns.
They're valid concerns.
Inflation we've seen for the last 3 or 4 years, it's very difficult to contain. Now he has to see which direction is the fiscal deficit going. Next month you should have the monsoon forecast, which is very important both for food inflation and the overall inflationary expectation and sentiment. So before knowing these critical things, there's also a political factor, what's happening in Parliament, whether policy direction would be fine, whether government starts spending. So he has to keep all this in mind before building any expectation that, okay, now I have, changed gear and I'm going to keep cutting rates.
Absolutely.
That is not it, and that should not be it.
And he's been there for a while now, so he really knows what to do. One last question on this particular subject. Should we be expecting, and I know we talked about expectations being unrealistic and everything else, but should we be expecting maybe another baby cut in the May policy? Although I would like to qualify that by saying, would it be a correct assessment if I said that there is unlikely to be any aggressive easing, but easing will continue at a gradual pace going ahead? Or do you think, because he said we have very limited headroom, this far no further?
I think the message from the Monetary Authority is that you keep things under control and
we'll
discipline in March, April and early May, and the monetary response would be commensurate with that.
Absolutely. So I think we'll have to wait and watch what really happens to inflation, what really happens to the fiscal deficit, which direction is that going in.
And what is the monsoon forecast?
And what is the monsoon forecast? Because that's going to play a very important role in inflation as well. All right, we'll take a small break right now, Himanshu. We'll come back with the second story on Policy Watch. Don't go anywhere. Lots more to come on Policy Watch this week. Stay tuned. Welcome back to Policy Watch. Now, the Union Cabinet on Tuesday cleared the National Food Security Bill that gives legal entitlement to 67% population, including 75% rural and 50% urban, for subsidized grains under the Targeted Public Distribution System, or TPDS. A beneficiary will now be entitled to 5 kg of rice, wheat, of coarse cereals at rupees 3 kgs, 2 kgs and rupee 1 kg a month, and will be identified by the states based on parameters prescribed by the union government. The Cabinet gave its nod to the 71 amendments proposed by the Food Ministry, including the one that said the 2.43 crore Antyodaya Anna Yojana beneficiary households will continue to get their quota of 35 kg grains a month under the TPDS. The revised bill is slated to be introduced in the lower house of Parliament after Parliament reconvenes on the 22nd of April this year. Now, Himanshu, activists have flayed the food security bill. Even before the first draft, the revised bill came in. I was talking to one of the Right to Food conveners, Viraj Patnaik, of course, and his team, and they flayed the revised bill as well. Now, we all know that. Now, they have an unlikely ally. Farmers Group, I was reading today. Now, farmers are saying that this bill makes the government the biggest buyer, the biggest seller, and potentially the biggest hoarder of grains. What's your take on that? Any real danger of the government actually becoming the biggest hoarder of food grains?
Yes, certainly. With government becoming such a dominant buyer of grain, so there's absolutely no doubt that it will become a major player. And there's also no doubt that it's not going to be the most efficient player in the market.
And we've seen that from past experience.
Yeah, even current experience, kerosene is an example.
Full of
which
leakages.
is meant to light up the lamps in dark villages, but it goes straight to petrol pumps and various places. So those concerns are very legitimate. And as far as farmers are concerned, they are finally sellers of their produce. And they would not like a huge monopolistic buyer to negotiate with.
Be it the government or anyone else.
Yeah.
So there is...
there is concern, and this is a bit of a ticklish issue, because on one hand, there is no denying the fact that government needs to do something for the poor, because they are the first to be hit by any economic recession or slowdown in growth, and they are last to get the trickle-down benefit of that. Absolutely. So in the interim, you got to provide for them. Otherwise, there can be huge social unrest and other problems.
Staying on the revised bill that was cleared by the Cabinet, I think, on last Tuesday. Now, critics also point out that there is no time frame for full implementation or any objective criteria, for that matter, for phased implementation. They also say that there's one basic flaw in the bill's framework, which is a complete absence of guarantee of farmers' livelihoods. There are other big refrain, of course, to increasing production. There's nothing in the bill for that. Guaranteeing minimum support price, or MSPs that we call them. There is no decentralized procurement. There is no decentralized storage. Now, reading this, what I'm reading right now, someone would say that, anyone would say that this bill is going to be of no use at all and only be, a bigger burden on the government subsidy bill. Is that really the case? Are there absolutely no positives in the bill?
Well, that's not really the case, but to be fair to whoever is saying that, that is a genuine, legitimate concern. That thing could slip that way. Because it's very difficult for anybody to assume that, this system is, unlike many others, going to work perfectly and only the targeted people are going to benefit. If there are leakages, if there are problems, there can be trouble. And the other thing is, what it really seeks to address is the food situation in the country. And, my view is that you cannot have a huge costly scheme on this without trying to increase food production. That is the key. And if that is the strategy, the farmer would also gain and the consumer would also gain.
Right, right.
So, there are some good things happening, like trying to extend green revolution in East India and all that.
Right.
But overall, unless India's productivity in agriculture goes up substantially, I'm not even saying to the Europe and US level, but at least to the Egypt level,
right.
which is comparable in economic development and climatic condition. So, in the absence of that, if you're trying to solve your food problem like this, I think farmers have a legitimate concern.
Right. On that note, sir, we'll take another break. We'll come back with the third story on Policy Watch this week. Take a small break, come back. Policy Watch returns on the other side. Welcome back to Policy Watch. Despite a gloomy global environment where there has been a contraction of trade, India and Africa have revised their bilateral trade target upwards by to $100 billion by 2015. The decision to revise the target was taken by at the India-Africa Ministers Roundtable Conference chaired by Commerce Minister Anand Sharma. Indian investments in Africa are now close to $50 billion US. Himanshu, how important is Africa for India now, trade-wise, given the fact that Africa is certainly the next big market now?
Yeah, it is. The number one importance, as far as I see it, is it's a huge source of minerals and oil and gas. It's not been fully exploited. So, and India, the country which is looking for sources of energy, so India needs to be there. And any agreement that takes you closer to that is important.
The increased trade, of course, of the 100 billion target now. Do you think that's realistic now?
It actually is.
We're talking about the whole of Africa, not just one country. Yeah.
It is because, one of the things Africa has done, which not many people, it's not been highlighted, is that many economies in Africa are actually growing pretty fast. Countries people cannot spell or have not heard of also, they're growing 6%, 10%, 11%. So there's a lot of action happening there. And I think it's time for India to establish a business presence, boost trade at this stage. And it's not just, the very poor and the least developed countries. You also have Egypt, which is doing fine. You have South Africa, which is quite a rich country. So there is a lot of scope.
Nigeria, Sudan. Sudan is full of oil as well. And especially given the fact that China is already there. It's already there in big way.
It's heavily there, both in oil and gas and perhaps even more in minerals. So India absolutely needs to be there.
One last question, Himanshu, before we close the show. What industries and what sectors? You mentioned oil and gas, you mentioned minerals. What other sectors, industries? Telecom is one that perhaps, I think Bharti Airtel, one of the bigger companies, went to Nigeria, opened up a huge network.
Yeah, but the problem in telecom is that, it's not an integrated market. So, and there are so many small countries. So a country on its own does not make business sense to be there. And if you have a wider circle, then the conflicting regulation and lack of uniformity is a problem. But I think, again, mineral related in a sense, gold, diamonds, that place has a lot. You got
so those are sectors that India should concentrate on.
Even tourism is not a
it's not a bad thing to look at,
actually,
especially South Africa
for
as
both
well.
countries.
Right. On that note, sir, thank you so much for your views. We have to end our show on this particular note. That was Himanshu Watts, Energy and Info Editor at the Economic Times. And that's all the time we have. Before I go, I'll give you the key takeaways. The first story on Policy Watch this week was the RBI rate cut. They cut the repo by 25 basis points. Subba Rao, the governor of the RBI, Subba Rao, said that there is very limited headroom for further monetary easing. We'll have to wait and watch what other conditions are factored in the May meeting. Of course, Himanshu mentioned inflation, and the monsoon is going to be really, really important as well. Our second story on Policy Watch this week was the revised food security bill that has been cleared by the cabinet. It was supposed to be tabled in Parliament. Parliament has been adjourned today, but when the Parliament reconvenes on the 22nd of April this year, the government will want to push this food security bill and make it into act as soon as possible. Political considerations there as well. Our third story on Policy Watch this week was the uptick in the revised bilateral trade target between India and Africa to $100 billion US. And like we said on the show before, Africa is a huge growing market. Minerals is something that India should be looking at. Oil and gas could be, looked at as well, especially given the fact that China has already established a huge presence there. India should be looking to increase trade in Africa as well. That's all the time we have on Policy Watch this week. Athar Khan saying goodbye, good night, and thank you for watching.